What a day, what a crazy day in the markets. Now, to be fair, by the time the closing bell went dingity ding ding ding, we effectively went nowhere. If you're a person who just looks at the daily charts, you might be thinking, not much happened. But if you're a person who likes to watch the game as it's playing out intraday, it felt like we were on some form of a crazy roller coaster. I hope you're able to take advantage of all that volatility, but that's exactly what I want to talk about. I want to give you a quick little TLDR of all the crazy things that went down today, of why we saw so much just movement to the upside, to the downside, a lot of whipsaw. I also want to give you an idea of what to pay attention to not only tomorrow, but for the remainder of the week, because I think the intensity is really going to go up a couple notches. And then finally, I want to give you an idea of what I do with my own trading account and how I was able to lock in right around $3,000, pushing my account a little bit higher. Very quickly before we get into all that, if you enjoyed this type of daily update content, let me know by hitting that like button and don't forget to subscribe. And with that being said, let's rock. For today, March the 6th, we officially ended in the green. Applause around. S&P 500 and Nasdaq closed higher Wednesday, regaining some ground from recent sell-off, which basically means that yesterday was a big old fake out. In fact, if you looked at the pre-market session, we had a nice gap up, and then today when we basically went sideways, like I said, in a violent manner, that's why we were in the green. The SPY closed the day up 0.5%, the Qs closed the day up 0.6%, and yeah, as you can see from the movement down, then up, then down, a lot of whipsaw. I mean, my neck even hurts looking at it again. That wasn't really the big story. The big story related to the guy in charge of the money printer, Mr. Jerome Powell, who you're about to see, was in front of Congress today testifying, and he's doing it again tomorrow, so details on that. There's a renewed fear in the world of banking, and is it under extreme pressure? Powell reinforces position that the Fed is not ready to start cutting interest rates. This should be a surprise to absolutely no one. The market for a bit there was like, oh, we bet there's going to be 6 rate cuts and you're going to do it. And the Fed's like, no, we're not. That's crazy. And they're like, no, we bet you are. And the Fed's like, no, we're not. And then eventually the market's starting to learn that the Fed has been honest about that the entire time. Fed Chair Jerome Powell said policymakers remain attentive to the risks that inflation poses and don't want to ease too quickly. They're looking for that Goldilocks situation. They're looking for the soft landing that everyone on financial media keeps talking about. The committee does not expect that it will be appropriate to reduce the target range until it has gained greater confidence that inflation is moving sustainably towards 2%. They don't want to overdo it. They don't want to underdo it. They're looking for the Goldilocks situation. Powell noted again that lowering rates too quickly risks losing the battle against inflation and likely having to raise rates further while waiting too long poses danger to economic growth. So no matter what you do, you're going to make one of these probably unhappy, and that's why you're trying to thread the eye of the needle, which is the soft landing we hear so much about, and it's a lot easier to talk about it than to actually pull it off. So with that in mind, Fed's Powell says significant changes to bank capital plan likely. I don't want to bring up any horror stories, any nightmares, any memories of this, but a couple months ago, we had some banks blow up. Some of the biggest bank blowups we've ever seen. And right now, if you look at what's happening with NYCB, it looks like there might be another. NYCB downgraded to junk by Fitch as Moody's goes even deeper. New York Community Bancorp credit grade was cut to junk by Fitch Ratings, and Moody's Investor Service lowered its rating even further a day after the commercial real estate lender said it discovered quote-unquote material weakness in how it tracks loan risks. Fitch downgraded the bank's long-term issuer's default rating to BB+, one level below investment grade from BBB-. Moody's, which cut the bank to junk last month, lowered its issuer's rating to B3 from BA2. Now, you don't really need to know the exact definition of all of those ratings. All you have to know is different ratings agencies looked at what's going on with NYCB and said, this isn't good. And the situation kind of almost boiled over today, where everyone's like, this might be shutting down. And you can see NYCB went from $3, vomited all the way to $160, $170, huge percentage hit. And then the craziest thing happened, and it ended up closing out the day up 7%. And you might be scratching your head thinking, wait, what happened? People thought the bank was going to die, and then all of a sudden it was a huge bounce back. Yeah, NYCB raises more than $1 billion in equity led by the former Treasury Secretary. Commercial real estate lender New York Community Bancorp received an equity investment of more than $1 billion. In evaluating this investment, we were mindful of the bank's credit risk profile. With the over $1 billion of capital invested in the bank, we believe we now have sufficient capital should reserves need to be increased in the future to be consistent with or above the coverage ratio of NYCB's large bank peers. These banks, you can't really be that much of a risk to the system. There's rules and regulations against it, especially ever since '08. So with them, they were coming close to it because once again, corporate real estate's on tilt. But then finally, the former Treasury Secretary and a couple other players stepped in and said, you know what, we're going to help you out. And obviously, they did it exactly at the right time because things were looking pretty suspect there for a second. All of this ties back to, yes, craziness in the banking sector, but the larger thing, don't forget, relates to Jerome Powell, the chairman of the Fed, what's going on with interest rates. All this is intertwined, and I do want to remind you that the next FOMC meeting, the Federal Open Market Committee meeting, will be on March 20th. That's when we are basically going to hear from them that they say, hey, we're not changing the interest rate because inflation has not come down enough for us to be convinced that this is the time to take the foot off of the pedal here. Or really, I should say, inflation has the foot on the pedal and they're driving like crazy. And the Fed's trying to say, whoa, brother, you need to slow it down. So with all that in mind, the fun is just getting started because tomorrow it's happening again. It is going down again. So not only was the Fed chair talking to the House today, he will be speaking with the Senate tomorrow. The other things you need to know about is early tomorrow morning, that FOMC meeting I was just talking about in the US, the equivalent of that for the European Central Bank, our friends across the pond, we're getting their result at 8:15 tomorrow morning. So definitely understand that in pre-market, don't be surprised if you see a bit of volatility in one way or another. Speaking of volatility and the craziness in the world saying, we don't know what's really going on, it turns out people are clearly enjoying a flight to safety. Gold, real gold, actual gold, clocking in a new all-time high. Definitely some crazy stuff happening there. If you've been a gold bug, if you're riding your gold investment, massive congrats to you. But that's not the only thing looking pretty solid. Digital gold making recovery. I get it. Yesterday, we hit that all-time high just above 69,000, quickly got smacked to the tune of 10K, and guess what? It didn't last that long. Granted, we didn't hit a new all-time high today, but look at that recovery. As I'm filming this right now, just above 66. Impressive, and it's for good reason. BlackRock's Bitcoin ETF added a record 12.6K BTC in Tuesday's carnage. So yeah, people clearly willing to buy the dip. And I just wanted to show you right now what's going on with all the major ETF players. I mean, BlackRock itself, over 11 billion. Look at the flow. This is a basic supply and demand issue. There's not much supply and there's high demand. And what does that mean? It means prices go higher. And right now we have some new analysts calling out 150K target. For me, if that happens, that's awesome. They're calling out for it in a very short amount of time. They're looking for it in 2024. Like I said, if it happens, that's cool. But for me, my price target is higher and I'm a long-term investor. I don't really care to play it in the short term of the swings up and down. I'm looking at the big picture of monetary policy and the debasement of our US dollar. And I just want some of my personal wealth stored elsewhere where I think it's a bit safer. And once again, this is just my own opinion. Do what you think is appropriate in your situation. Another thing you should be paying attention to in the short term is the fact that semiconductors are ripping. I know many of you know these names. I mean, look at it. NVIDIA, AMD, new all-time high. SMCI, new all-time high. These semiconductors, these processing chips, they are the hot ticket. And I do want to remind all of you that after the market closes on Thursday, Broadcom, ticker symbol AVGO, the second biggest semiconductor play, will be reporting. So pay attention to it, put it on your watch list, do what you need to, but I need this on your radar just because this sector is crazy, it's hot, and this is going to be very influential. If it hits, if it beats, look for things to continue to rip, and if it horribly misses, look for things to take a pretty brutal dagger to the other side. So obviously a high risk binary event. Once again, Broadcom, ticker symbol AVGO. I just want that on your radar. And last but not least, let's wrap it up. If you like this information, if you like the idea of all these major macroeconomic events, all of the earnings, all of the seasonality for every individual trading day, you can get this for free, macros.locals.com. That's where you can sign up for the newsletter. It'll come to your email inbox every single weekend. And we kind of do a further breakdown of it every single morning from 9 to 11 on the live show. If you want to hang out, see what's going on there, I highly recommend you check it out. And you might even learn a thing or two, or maybe you'll have laughs, or maybe you'll just learn from my complete mess ups. But anyway, Didn't have one of those today. Weird trading day, but I was still fortunate to lock in about 3K before fees, about 2.7 after fees. The way it all went down was Piper, a system that I've created, told me early in the morning, right around 10:51, about 20-30 minutes into Powell's real speech, told me to be bullish. Not the most confident, but bullish nonetheless. SPY put credit spread, a Q put credit spread, and then I ended up, instead of doing the SPY and the Qs, I ended up taking advantage of it via SPX. There's some advantages to it, but anyway, I sold at 80, bought it back at 20, made about 75%, and that ended up locking in 3K, 2.7 after fees, which on the week puts me up from Monday to today about 10.3 thousand. So thus far, solid week. Hopefully, fingers crossed that we can conclude it Thursday and Friday, setting up for hopefully some interesting, highly volatile days. Now, obviously, if you're curious about some of this advanced options trading strategy, if that's something you want to learn about, check out the Discord. The first month is 100% free if you use the code Goonie. And the reason I do that is I don't want anyone to feel like they got caught. Sign up for the month. If you like it, it's great. Stick around. I think you're really going to enjoy it. But if it's not exactly for you, if it's not exactly your speed, hey, it didn't cost you a dime anyway. That's your wrap up for the day. I think the remainder of the week is going to be even more exciting. I hope to see you in the live stream. Peace out.